Hello people, welcome to Millionaire Nation. Today we are about to know the current housing market situation in the United States.
Meantime, the housing market has some analysts worried. They say it's collapsing at a level not seen since 2008, potentially.
Now, anyone shopping for a new home has seen it firsthand. U.S. home sales going hot to ridiculous levels.
Mortgage rates have been dropping since the start of November, but it does not appear to be helping the housing market that much. 30-year rates fell near.
Home is where the squeeze is. Mortgage rates are at their highest in 2 decades. The average on a 30-year fixed rate.
Hey, Eamon, yeah, mortgage rates have come down sharply from their recent highs, but it's still TBD if they're going to stay here. The average rate.
With skyrocketing mortgage rates and a drop in rent prices, both buyers and sellers are freaking out about present real estate in the United States. Let us go back a little bit and understand the complete story of how the housing market crash could happen in the United States. Let us take the 2008 housing market crash as an example. The birth of the housing market crash will start with wide layoffs happening in companies. These layoffs are caused due to inflation, which increases the raw material the company needs, whether it may be goods or services. Due to this increase in price, companies lay off employees to reduce their cost of production. Meanwhile, before this happened, banks would give individuals and families home loans and set a mortgage rate to pay off their loans in a period of time. Usually this would be for 30 years. So as the recession hit the US market, there were no jobs available for people for a very long time. So individuals became defaulters to pay their loans. So banks would sell their homes for lower prices, causing a massive drop in the real estate market. Seeing this as an opportunity, high net worth individuals would sell all their stocks in companies they have invested and dump all that money into real estate to make a safe investment, which indirectly increases mortgage rates. There is also another issue that caused the burst of the housing market bubble in the US. As banks giving out many loans as possible, mortgage rates have been increasing rapidly. So rents of houses are also increasing very much, which again led to the unaffordability of houses to a common man in the US. So these all led to a burst of the housing market bubble, bringing down the mortgage rates and also the house prices to almost 10% of their previous value. Coming to the present situation, we are seeing a massive recession happening in the US market. Big companies such as Twitter, Robinhood, and Glossier have notably trimmed down their headcount in late 2022. It is estimated that over 150,000 employees were laid off from their jobs due to the recession. If you have watched this far and thought we provided good value for your time, please subscribe to our channel and hit the like button, which boosts our confidence to make more videos like these especially for you. Let's get back to our point. Due to this, the defaulter rates of individuals paying home loans are increasing day by day and are at its peak at the present time. Mortgage payments are building up, and interest on the mortgage also building up. So banks decided to increase mortgage rates to reduce the risk of individuals taking home loans. Mortgage rates have increased from 2.3% to 4.23% in the last 1.5 years, which is also leading to the probability of a housing bubble burst in 2023. The affordability of homes for a common man is also at its peak, because all the mortgage interest rates have increased. An individual doesn't even get a home loan from the bank, and also won't be able to find a home for his family, because of mortgage increase, brought a high increase in rent payments for the homes. All these factors caused the home price to inflate artificially to its peak. You can see the below graph published by Fortune, which shows the overvalued versus undervalued graph of present home prices in the United States. You can also notice big stock price drops in companies such as Zillow and Opendoor technologies, which mainly function in the real estate market. All the major stakeholders in Zillow are very worried about the burst. And also we can see major sellings of these stocks happening, and people are cashing out their money before the burst happened in the United States. These all indicators give us a clear indicator that the real estate bubble is going to burst in early 2023. So if you want to be unaffected, or want to earn some more cash in this bear market, don't sell your houses. Rather, buy a house if you have any savings left. Only buy houses with complete payments. Don't buy with any mortgages because of having high interest rates. Because you will be paying more amount to the bank than appreciating your property. Invest all your money in buying a real estate property when the burst happens, so that you get homes at a very low cost. And also mortgage interest rates go down after the burst. We see this trend happening every 10 years. So each and every price that goes down in a bubble burst will recover and gain its original value within years, and gain the same worth it had before. So many people have become multi-millionaires using this bubble burst as a tool, and buying properties at dip and cashing out them when price increases. Every person is very worried about the housing market burst happening in the United States because people with no shelter under their roof will be very worried about their situation of getting a home. Also, if you want to know how student loans are causing a huge burden upon students and the United Nations financial system, please click on this handpicked video just for you. Thanks for your time.